Hello, and thank you for joining us for today's MacDesk Floor Report. My name is Rebecca Darst from the Market Access Center, breaking it down for you here on the floor of the New York Stock Exchange as we prepare to put a cap on the month of August and a summer of super lightweight volumes. There's one more market catalyst to await before we pack up our things for Labor Day weekend, and that is Fed Chairman Ben Bernanke's address from Jackson Hole. The address is sure to be parsed exhaustively. We are gathering comment from analysts in our sphere and want to pass along the best of what we've been seeing. Brown Brothers Harriman's FX team, incidentally, was out with a note early this morning on the major dollar crosses, predicting that Bernanke will likely not signal a new round of QE3, and pointing out empirically that any kind of QE3 chatter in the market in the recent past has typically driven the dollar majors lower, but then recovered when the Fed has failed to follow through. We're seeing implied volatility moving higher today in options on ticker UUP, that's the Dollar Index Bullish Fund, as traders buy longer dated puts at close to the money strikes in December and January. This may be an indication that option traders in that fund are either hedging long dollar positions through the end of the year using puts on UUP, or simply playing dollar bearish views and favoring a new round of easing through the same positions. We've also been seeing implied volatility in SPY options rising consistently over the past few days. Not a surprise at all heading into the event risk ahead of the weekend. Otherwise, we've been looking at very subdued action in the broader equity markets. We're down about 100 points in the Dow after global indices closed mostly lower this morning. Resolution on Spain's sovereign debt status was deferred once again this morning after talks between Spanish and French leaders produced no decision as to whether or when Spain might seek a bailout. The uncertainty, as has so often been the case throughout this European saga, sent fund flows into the relative safety of German bunds. Today, however, we got another reminder that safety is largely relative when you're talking about Eurozone matters, as German unemployment data increased more than analysts had expected in the month of August, showing a fifth straight month of gains on the German jobless front. Weekly jobless claims here in the U.S. were unchanged against last week's reading, coming in at 374,000 and a one-month high. While that was a little disappointing to market observers, many economists feel that it's not dire enough to warrant QE3, and that's feeding into the dovish Fed camp ahead of Jackson Hole tomorrow. If there's been any kind of bright spot today, it's been news on the American consumer front. Consumer spending data for the month of July showed its first pickup in 3 months, and a string of August same-store sales reports from leading retailers showed absolutely bumper numbers for the back-to-school shopping season. 15 retailers in our coverage sphere beat street estimates, and that has boosted the sector today. Again, we are looking for fairly range-bound price actions and subdued volumes, as all eyes will be on Bernanke and Jackson Hole tomorrow. We'll bring you all the angles from the trading floor in the midday. For now, that's it from me, Rebecca Darst, wishing all our listed companies a very safe and happy Labor Day weekend from all of us here at the MacDesk Floor Report.